What exactly caused the Bitcoin to fall by more than 15% recently? Hello everyone, my name is Brian Yang. We are specializing in selling mining machines. I am happy to talk to you today, but investment is risky and the market is uncertain. The content of this video only represents my advice and cannot be used as investment advice. On January 19, as we expected, Bitcoin returned to 41,000. Bitcoin fell by about 3% to around 41,330. According to the chief analyst of Crypto Slate, between January 17 and 18 local time, short-term Bitcoin holders transferred appropriately $2.4 billion to the exchange, and Bitcoin was suspected of selling at a loss. Long-term Bitcoin holders who established a position around just last year transferred appropriately $1 billion in Bitcoin to the exchange. At the same time, the continued large outflow of BTC has introduced uncertainty into the market. Part of the uncertainty comes from Nanjing data settlement because T+2 settlement data of US stocks may have caused the market to misestimate the scale of new capital entry and the degree of interest in the interest ETF. The other part is the net outflow of the crypto futures products such as Pro Shares, Bitcoin Strategy ETF. Although they do not hold cash BTC, in order to achieve a new net outflow, selling long positions in the futures market will be the inevitable result. This puts pressure on BTC prices, and this part of the pressure will continue to have net outflows. Previously, according to JP Morgan Chase data analysis, GBTC was expected to have a net outflow of $3 billion, and according to the latest news, once GBTC loses its liquidity advantage, there may be an additional net outflow of 50 to 10 billion US. Therefore, the turmoil caused by the transfer of ETF assets may continue for some time. At the same time, Europe is planning to implement more stringent regulatory policies for crypto users on the grounds of strengthening anti-money laundering measures in the crypto industry. The Canadian Securities Administrators (CSA) has issued regulatory requirements for public investment funds seeking to invest in crypto assets to better protect investors and reduce risks. The requirements include crypto asset investment restriction and custody obligations requiring only alternative investment funds, and only by redeeming investment funds are you allowed to directly buy, sell, or hold crypto assets. The key is that these assets must be insured and stored in cold wallets. It is no exaggeration to say that the ratio of insurance funds to assets for crypto assets will be exaggerated. If you don't set a stop loss, it is likely that it will be one to another, which will undoubtedly greatly limit crypto assets investment. In addition, macroeconomic regulation from the outside seems to indicate that the Federal Reserve is returning to the expectation management mode, although it has expressed an open attitude towards interest rate cuts in the third quarter. This means that the previous market expectations for a possible interest rates cut in March have basically come to nothing. It is worth noting that although downward expectations still exist in the short term. Bitcoin has not fallen below 40,150 support level, which means that the upward channels is also open, but this may also depend on influence of macro factors. Tonight, the U.S. increased the delta selling, and the announcement of the Treasury bond insurance allocation at the end of the month may be particularly important, which will determine whether the capital market liquidity is sufficient before the interest rate cut. As for the point of view, lightning rod is more inclined to this round of U.S. bond insurance, which may be dominated by medium and long-term Treasury bonds, because the amount of additional insurance will not be as large as last October, and it is believed that liquidity will be reduced as a result, because Trump publicly stated some time ago that he was unwilling to be the second President Hoover to save the U.S. economy. If the economic crisis is to break out, I hope it will be before he takes office, and there is high probability that there will be some extreme pulling between the two parties. The only good thing is that as of early this morning, BlackRock was accumulating 25,067 Bitcoin at an average daily acquisition rate of 6,200. The total amount gained in just 4 trading days now stands at 70,000 Bitcoin and $2.9 billion US. Although this is very doubtful, we have to admit that it may be their massive accumulation of holdings that has delayed off the downward trend of Bitcoin. Lightning Rod once suspected that this momentum would continue until the BTC sell-off stabilized. Therefore, if it does not fall below 40,150 points tonight, you can try to add some position to risk a short-term corrections. That's it for this video. If this video makes you have gained something, please give it a like and subscribe. Your support is my biggest motivation for making videos. If you want to learn more about related knowledge, you can follow me directly or leave a comment. Thank you for watching.